Greetings to all. I'm Novalui, Head of Investors Advisory at RHB Bank. We extend our gratitude for joining us on our latest podcast, the Q3 2023 Fund Discoveries Idea Podcast. Prior to diving in, let's take a moment to examine the fund flow trends within the industry during the second quarter of this year. The largest influx of equity funds remains concentrated in Chinese equities, along with Singaporean equities also garnering notable attention. It's worth highlighting that a significant portion, around 70% of the fund flow, has been directed into money market funds. On contrary, there has been a noticeable outflow from global and technology-related funds. This outflow is particularly pronounced in equity funds when comparable to the inflow figures. Evidently, investors are leveraging the current market condition to strategically rebalance their portfolios, taking the most of profit-taking opportunities. The first fund that I want to share with you as a fund focus for this quarter is RHBI Sustainable Future Technology Fund. Technology represents the art of problem solving, and its evolution is crucial to tackle the world's challenges. As the next generation prioritizes sustainability, the realms of sustainable technology offers extensive investment prospects. Technology sustains long-term growth. The pace of innovation remains relentless, introducing fresh opportunities. From blockchain and Internet of Things, established domains like cloud computing, e-commerce, and ChatGPT technology offers diverse avenues for investment and expansion. Following the recent correction in August, within the technology sector, an appealing opportunity has arisen for investors to enter and capitalize on the potential for long-term growth. The fund's advisor, Janus Henderson Investors, is a UK-based team of sector experts with 80 years of collective experience navigating technology's hype cycle. Their experienced philosophy emphasizes valuation discipline as a cornerstone of bottom-up research. Secondly, is the RHB Pacific Technology Fund. In the realm of technology, an alternative fund worth considering is the RHB Pacific Technology Fund. In Asia, inflation seems to have peaked, potentially leading to Q4 2023 rate cuts, typically beneficial for equity markets. Beyond Hong Kong and China, the fund encompasses exposure to Taiwan, Korea, Japan, and other parts of Pacific equity market, rendering it a highly diversified fund. Key semiconductor players like TSMC, Samsung, Tokyo Electron, and SK Hynix has shown formidable first-half performance. The ripple effect of US artificial intelligence enthusiasm is permeable within Asia's semiconductor supply chain. Global sales of semiconductor manufacturing equipment by original manufacturer are forecasted to decline in 2023 after a record 2022. However, a rebound to approximately 100 billion is anticipated in 2024. The fund demonstrates robust diversification across Asia's technology sector and the subsector. This strategy diversity proportions the portfolio to seize opportunities in electric vehicles and the robotic industry, all while maintaining a defensive posture and evading undue concentration in any specific nation. In line with our strategy to broaden investment portfolio beyond China, we recognize India as a prospective investment decision. Therefore, the third fund that I would want to share with everyone is the Manulife India Equity Fund. India stands out on global economic stage, with IMF projecting India's growth of 6.1% by the close of 2023, outshining its peers. Esteemed entities like S&P Global and Goldman Sachs even envision India becoming the world's third largest economy by 2030. Reinforcing this promising narrative, India's technology sector is set to elevate its revenue by $245 billion by the end of 2023, as forecasted by NASSCOM. An appealing aspect of India's appeal lies in its role as an attractive alternative to the China Plus One strategy. Apple's shift to produce iPhone 14 in India paved the way, with numerous multinational corporations considering similar diversification move. Within India's landscape, the financial sector is poised for continued advantage as the central bank hit pause on interest rate adjustment, bolstering net interest income and margin. Furthermore, the country's projected wage growth holds promise, particularly benefiting the fund's key holdings in the consumer discretionary sector. This robust narrative cements India's status as the burgeoning economic powerhouse, charting a path towards enduring growth and influence in the global economic map. Another fund for diversification purpose is the AHAM World Series, Global Health Science. In our quest to expand investment horizon beyond technology, health science sector emerges as a compelling option. Steadfast demand, healthcare services exhibit stability in demand, making them resilient to economic shift and a robust choice for investors. An aging global population drives increased healthcare needs as a longevity rise and the demand for medical services surge, positioning the sectors for potential growth. Technological advancements from innovative drugs to advanced diagnostics are reshaping healthcare, offering fresh avenues for investors. The sector's stringent regulations assure quality care and prevent price manipulation, instilling investors' confidence. Despite lagging growth in the S&P healthcare sector, it presents a cost-effective entry point for diversification, setting the stage for potential gains. Incorporating the health science sector enriches our diversification strategy, tapping into unwavering demand, tech-led evolution, and regulatory stability. This strategic choice aligns with our commitment to robust portfolio management in a dynamic investment landscape. The last fund I want to share with everyone is on AHAM Select Opportunity Fund. In the ever-changing world of investments, Malaysia stands out as land of exciting potential, presenting a combination of positive signs that attract astute investors. The FBM KLCI, representing the top 30 companies in Malaysia, offers an enticing prospect. Despite initial appearances, this index doesn't fully reflect Malaysia's strong economic path. A clear example is the substantial 5.6% GDP growth in Q1 and 2.9% in Q2 this year, highlighting the country's robust economic undercurrent. A remarkable upswing in foreign direct investment, escalating by ringgit 14.1 billion, culminates in an unprecedented Q1 2023 total of ringgit 893.2 billion. With a steadfast aim of achieving a 20% FDI target and ambitious domestic direct investment growth projection, these promising figures find substantiation in MITI's commendable attainment of over ringgit 230 billion in commitment investments and more than 10 billion ringgit in trades thus far. Malaysia's monetary policy remains steadfast and supportive, steering clear of the excessive tightening observed in some developed economies. This accommodating approach underscores Malaysia's dedication to nurturing an economically favorable environment. The fund's prudent distribution across the Asian expanse mirrors the prevailing optimism within this geographical ambit. Thank you for listening to our fund discoveries idea. Please engage our relationship manager if you wish to know more about other funds on our platform. While visit RHB Merge website to view our other money chat or podcast series. Thank you for listening.